Welcome back. Well, let's go across to Manisha Gupta to get the latest from the commodity markets. Manisha, what are you tracking?
Well, thank you for that, Survi. When I look at the commodities overall as a segment, we've seen some profit taking with the month of June as it has begun. April and May were stellar months, whether you saw the energy markets or even metal prices and precious metal prices as well. But June has started on a weaker note, and these are the kind of losses that we have put on an intraday basis as in sense of overnight. So the maximum declines really coming in for the silver prices. We're trading below $32 onto that one right now. Sharp cuts coming in for crude prices. Iron ore fell 2%. And in case of the soft industrial commodities as well, palm fell by 4%. You had cotton prices trailing by nearly 3% on the weaker side as well. So the overnight action in case of commodities has been weak. But this is what we've done on a week-on-week basis as well. So this is the first week of June, where as well you have seen sharp declines come in. 7.5% of cut in case of crude prices, 7% down for silver as well. Most of the metal prices trading anywhere between 4 to 8% on the weaker side. Steel is down 5% in this week as well. Cotton is down by 9%. Palm is down by 10% as well. So most commodities have started the month of June on a weaker note. That is as the markets wait for the US non-farm payroll data that comes on Friday. The dollar index, after declining to a two-week lows as well, seems to be stabilizing above 104 right now. And the data that we've seen come in from various markets, it's slightly weaker than what the street was anticipating, is what is weighing onto the markets here. So when you look at the iron ore prices, we're trading at a 7-week lows onto this one. There are signs of weak demand in China. And with everything that China has done, the inventories are still on the higher side. And China is talking about controlling steel output later this year because of the kind of weather that we are seeing, and going forward would be strong monsoon. So in that period, you have weaker demand for metals coming in that would continue to weigh in sense of a cyclical session there. Also, when you look at the crude oil prices, we are trading at a 4-month lows onto this one. The US inventories have continued to increase, and the markets do not like on what OPEC and allies in their June meeting have said, that they will continue to ease production cuts going forward. That means more supplies coming in from OPEC and allies. There are more supplies in any case coming in from US and Canada, so that's weighing onto these markets as well. Apart from that, the gold prices also continue to decline after hitting a 24.50 of an all-time highs. We are trading at 23.20 onto this one. This one as well is seen a bit of a weaker stance coming in for the international markets. Also, when you look at the silver prices, we've continued to decline onto that one, trading below $30 an ounce. The high that we saw into previous week was above $32 as well. So from an 11-year high, we are trading at a multi-week lows onto this one as well. So silver prices also continue to decline. That's pretty much the case that you've seen for other metals and energy as well. Copper, for example, is trading at a 1-month lows right now. China inventories are the highest since 2020. The LME inventories seem to be building up. And after that run up to an all-time highs, there's a big amount of profit taking that seems to be coming in across metals as well. So from where I stand right now, overnight has been a weak market, and the beginning of June as well hasn't started so strong.
Okay, all right, Manisha, thanks a lot for that.